Hello guys, my name is Engineer Zax. So today I'll be taking us on introduction to technical analysis. Definition of technical analysis. Technical analysis can be defined as the use of charting tools to understand price movement in the market using past market data available. So this definition is in the PDF I have assembled, so you can go through it. So in other words, technical analysis is the use of historical price action to forecast future price action. So technical analysis, we use past data to make insights of the future scenario. So if you want to buy, we try to understand what has happened from the past, if this an area is a good area to buy, right? So those are past data. So it is the use of, we use charting tools. Like this data now is represented in form of this chart you're seeing here, right? It has data in candlestick. The chart appear like this is a candlesticks chart. So the data candlestick shows you what's happening at a particular time and at a price. So this is a chart, and on my right here we have the price and we have the date below. So we say we have x and y axis. So this is the x, this is y. So your y is the price. Price is 1.42 for this pair, USD pair, and the x, you can see the dates 2024, what has happened February, March. That's, we have the date. So, and ideally the price is dependent on the time, right? That's y is dependent on x. So what are charting tools? Charting tools include the use of charts and its components like candlesticks for analyzing, and this is a trading view I use in analyzing. This is a chart, like I said, and these are candlesticks. Don't worry, you get to understand what candlesticks are. Why do we use charts for analysis? Now, why we use these charts? These are charting tools. If you go to the left, you see dot, cross, you see option, you see trend line, raise. These are tools you use to draw on your line. If you put trend line, I can put it up to here and you see something like that. These are charting tools. These are tools we use. You see horizontal ray. If I put it in this high, you can make it stick. These are charting tools. You can have your brush to draw. These are tools that will help you. All these are all tools. Text, you can text on it. So those are tools. Those are charting tools, what you use to analyze, right? Those are tools. Above it we have your time, 5 minutes, 15 minutes. Each candle can represent either 1 minute by each candle. Like now, this is the 1 minute. So this is the 1 minute. Each candle here is representing 1 minute. Like this 11:05. This each candle can represent 30 minutes, 15 minutes. This candle now is representing 30 minutes. Each candle can represent 1 day, 1 week, 1 month. So that's the dates, the time. Now we also have the types of charts here. We have the bar chart. Look at, if you put the bar chart, if you put the halo candle, it's like this. if you put the line chart, it's like this. You can use any of these things to analyze, but personally I use candlesticks because it shows me the data, the time, and at which price buyers and sellers are trading. So we also have indicators. We use indicators. I don't use much, so we use indicators for confirmation. In our chart we are going to talk of indicators too. This is the alarm. If you want to set alarm where you expect price to reach, you create it. So these are charting tools. These are the tools we use to analyze, to know when to buy and when to sell. So this is what technical analysis is about, trying to predict where price is going to go to. So it shows us the market direction. As you can see, when price was at this place, when price was here, price went up to this place. So it shows us its direction. So when it was going up, we know that it's in a bullish trend at this point. That's the direction. It shows us when there's a change in trend. You see, when it got to this place, it's still coming down. That means it's changing trend. It shows us the market structure, support and resistance. Market structure means the movement of the market, like this change in trend, support and resistance, areas where you buy, areas where you sell, areas of liquidity, and so on. The chart shows us where to enter and exit a trade. So with this chart, this is the chart. This is how you analyze with this chart to know when to buy, when to sell, when to enter, when to exit. The charts gives us clear invalidation. If maybe you want to buy from here, you're hoping it goes like this, automatically your stop loss, you'll be cutting your stop loss around here, because if it comes below further, that means price is seeking lower prices. So it's a clear invalidation. So this chart is how this is the charting tools you use to analyze the market. So I've explained the types of charts, the line charts. There are a lot of charts, but I use the candlesticks chart. So the most important thing to consider when trading is the time and the price. That's the most important things. Now, like I said, I was going to come back to the candlesticks. So how do we understand this candlestick? As you can see, they are just there. You don't understand what's happening, and so in the PDF, it's all there. You have, let's say you have a stick like this, something like it. So basically you have your low, your open, your close, your high. Now we have another one. We have the high, the low, the open, and the close. So these candlesticks, now this particular one is called the bullish candlestick. The second one is called the bearish candlestick. So this candle is a sell candle. This is a buy candle. So we said this high are called the wicks. The wicks, look at them, this tiny stuff above the candle. while from the open to the close is the body of the candle. The body. The ideal picture is in the PDF, so just go through it. I want to make this video as short as possible. So this is the body, the highs and the lows, those are the wicks of the candle. Now what it means is that when a candle opens, the first thing a candle do is for it to open. So when it opens here, this is the opening price, and comes down, then comes up, then come down to close. It means that it's opening, it went down to seek a lower number, a lower price. So when it's seeking a lower price, it means that okay, you are buyers are positioned to buy lower to take profit at the high. That's why you see that it forms, when it opens, it go low. After going low, it goes high, then it finally close. So from the close to the open is the body. So that's why we have our body like this. So the highs and the low, they are the wicks, they are outside the body. For example, let's just take one of this candle. So I'm using this last candle here. So this candle, this particular one, closed down. It opens here. As you can see, there's no wick. This tiny stuff is not there. It just opened. Some candles don't have wicks, while some do. Candles without wicks are candles with pressure, either bullish or bearish pressure. So as you can see, it was selling, so it's just selling without wicks. So but then it closed here, it opens above and close below, no wicks. So this is a bearish candle because the opening price is higher than the closing price. But then this other candle, after this one close, it opens. When one candle close, the other one's open. It came down to seek for lower prices. After seeking for lower prices, it went above the opening price and then bought to the upside. So it means that the opening price is higher than the closing price. So there is a presence of buyers there that bought this candle. So this candle is a bullish candle, it's a buy candle. It bought to the upside. Same with this candle. After this one closed up here, this one came down. The wick is usually tells us where price got to. If you put it to a line chart now, you will not see it. But if it's a candle, you see it. It's showing you details of the particular price, the particular area price got to. So when it opened, it got down and then came above it. It formed the low, came above it and closed above. So the opening price is higher than the closing price, which makes it a bearish candle. So it's not about the color, it's about what's happening. When one candle closes, like this candle closes here, it went up to make the high, and then the opening price is lower than the closing price. That's what forms the body. The opening price is higher than the closing price. That means it's a bearish candle because they sold. That's how the candlesticks works. So when a candle opens, like this one opens, goes down to create the low price. So if you want to buy lower, either you position here, depending on the setup though, but you want to buy at a lower price, either at the low or at the opening price. So you know that when it close, it's going to close higher to be a bullish candle for you to buy. So the candlesticks shows you details. It shows you details. When a price opens lower and closes higher, it's a bullish candle. But when it opens higher and closes lower, it's a bearish candle. They sold. So the highs and lows are highs and lows. If you see, they remain unchanged. But for the bullish and the bearish, the difference are the opening and closing price. If it's bearish, the opening price will be higher than the closing price. If it's bullish, the opening price will be higher than the closing price will be higher than the opening price. So you think about high and low numbers, high and low prices. Because if you want to buy at the low or the opening price to know that when it close, it's going to be bullish, you're going to make profits. If you want to sell at the opening price. You want to sell at the opening price, hoping it's going to go lower at the close to make money. Uses of candlesticks. A candlestick shows price reversal, indecision, and trend continuation. I know these words might be new, yeah. So, but then we'll get there. Price reversals means if price is going up, let's say at this point where price is going higher, 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 and then it's changed and still coming down, it means that at this point it has reversal when you change direction. Then indecision, the chart sometimes might not be decisive. You will not know where price might be heading. So the candlesticks can also be used for entering and exit. If you want to buy a market, you want to enter a market to buy, to sell, whatever it is, entering and coming out, either with profit or with loss, the candlesticks gives you confirmation to do those stuff. So you need confirmation to make sure you're actually right with your buyers. A candlesticks shows the market sentiment at a time of trading. So it shows you see the red candle. They usually say the red candle is your bearish candle, the green candle is your bullish candle. But then what matter is the opening and the closing price. So if the price is higher, if the opening price is higher than the closing price, that means it's a bearish candle. But then if the opening price is lower than the closing price, is a bullish candle. Bearish candle, opening price, when price open and goes down, that means the high is higher, the opening price is higher than the closing or the low price. But then when candle opens and goes up to a higher price, that means the opening price is lower than the closing price, which is bullish. So we have different types of candlesticks. So these are shown in the PDF. You see there are some candlestick with wicks and without wicks. So in the PDF you can see a description of the candlesticks. So we have long body candle. You can see it on the chart. Some are long, some are short, and long body candles shows the buying and selling pressure. So if you see all these long sell candles, they are showing you pressure. All these candles here, pressure. These buy candles here, pressure. It's showing you it's buying pressure. So short body candles shows you little price movements like consolidation, when when you have short candle movement, like in this place, they are just, you know, small or something like this, consolidation. So we saw that the wicks tells us, the wicks are this thing above the candle, tells us the price level where the buyers and the sellers have pushed the price to, you know. Like for example, these candlesticks now, you see this candlestick went from here to here, so they pushed the price to this level before it got to this point. So the wicks, this one got to this level before it got here. So they are giving you details of what the buyers and the sellers have done, and you can see the short body, long wick, you know, and the ones that has smaller body and longer wick. So these are types of candlesticks. Go through the PDF, you see pictures. Even here you see an example. We have some candles that are called indecision candle. They have little body, they are like the cross. So like this now, indecision candle is like this cross or a smaller body, you know. So there are types of candle. Make sure you get familiar with it. So we have the premises for trading candlesticks. The premises include the trend, the areas of price action for exit and entry. So for you to trade candlesticks, you know, you have to know that okay, these are area where you want to buy or where you want to sell and stuff like that. You know, you have to know your support and resistance zone, your entry, and the types of candle used for entry and exit. You have different types of candlesticks. Candlesticks can be classified. Candlesticks can be formed in different time frame. Like this top, you see the time frame. Each candle can represent, like this, a 1 hour. Each candle here is representing 1 hour, an hour. Each candle can represent a month or a year. Let's say a month, you know, that's each candle here represents 1 month. So as you can see, we have data till back till 1971, because this candle here is 1 month. So we have different types of candlesticks. So basically, since candlestick can be categorized into bullish and bearish candlesticks, we have different types of candlesticks. Candlesticks can be classified in pairs, in 2 pair, or they can be 3. So the most common candlesticks pattern, just few, I'll be listing about 5, yeah, are engulfing pattern candlesticks. So we have the engulfing pattern, the hammer candlesticks, dragonfly, morning star, tweezer bottom, and all. So there are examples in the PDF. While we go further, I'll be I'll be showing an example of where the candlesticks are being used. So we have the hammer candlesticks, they are in the PDF. You can see the morning star, the dragonfly, the evening star, and so on and so forth. So like this is an example of an engulfing pattern candle. This is a bullish candlestick. This is a bullish candlestick, and then a bearish candlestick engulfed it, and this is our resistance area here where you're expecting sellers to come in. So that candlestick are giving you the go ahead to sell. and as you can see, price dropped down from this place and down here. So that's a bearish engulfing pattern. It's happening at a resistance, so it's giving you signal to sell. So we have these AMA candlestick, shooting star. So when it appeared here, it's in the PDF, it's giving you a signal that price is going to sell further. So from there, price sold down to this place, price sold down to this place, to this place, to this place, and then bought. So at this area too, we have another resistance here. We saw that there's an indecision candle and a bearish candlesticks. This that's evening star candlestick appeared here, and that's a resistance level. So price sold down to this support level, that's evening star. So that's how candlestick is. Candlesticks are for confirmation. You can see that I had my resistance there before I sold. So while I go further, while I take examples of trade, I'll be showing you how I use candlestick for confirmation. So that'll be all on candlesticks. Go through the PDF, check examples. While I go further, I'll put more examples on candlesticks. Thank you very much. Bye.